Welcome back to the Week in Markets. My name's George Bell and I'm delighted to be joined by Chris Leyland, our Director of Investment Strategy.
Thank you.
Chris, what's been the main event this week?
Yeah, it's actually been quite an interesting week. So I think for me personally, the main event has been the European Central Bank and their interest rate decision. And that has been the main event for today. That actually happened a little bit earlier this afternoon. And maybe it's just worth spending a little bit of time just talking around the background of what we've seen in developed markets in respect of inflation and interest rates. So for viewers of the Week in Markets, of Morning Markets, you'd be very familiar of the path that we've been on. So we've been on a path of very elevated inflation and interest rates rising to quell that inflation overall. Now, I'm delighted to say that we're on a path of disinflation. So what you've seen in Europe is the most recent inflation figures coming in at 1.7%. That's for CPI. Now that's really important, and it's really important because that is below the European Central Bank's 2% target for inflation. And what does that mean? Well, it means that instead of being on a path of raising interest rates, the ECB is actually on a path of reducing interest rates. So what did we see? Well, we actually saw the ECB reduce interest rates by 0.25%. So that's the third reduction that we've seen so far this year. And within that, very much expected. If we look at some of the kind of rhetoric that came out from the meeting, very much in line with what I've just been saying. So, a lot of discussion around that inflation is in a much better place. And also, quite interestingly, talking a little bit maybe around economic growth. And actually economic growth coming in a little bit lower than maybe what they were expecting, a little bit more sluggish. So Q2 figure came in at 0.2%. Q3 is expected to be 0.3%. But I think overall, what you've got there is a good news story. You've got inflation coming down and you've got interest rates coming down. And that's exactly what investors want to see.
And sticking with inflation, UK is in focus this week. What were the key developments there? Were they similar to the dynamics we saw in Europe?
Yeah, it's actually quite, even the numbers are very similar as well. So if I give you the numbers first, inflation came in at 1.7%. It's the exact same number that we saw with European inflation. It came in lower than what was expected. And that was actually taken very positively by the market. So the UK index was up just under 1% on the day when that came out. I think, if we look at the different types of inflation, and this is something that we talk about a lot on these videos, core inflation has come down as well. So that came down from 3.4% to 3.2%. But I think one of the most kind of pleasing things for me is actually services inflation. So services inflation has actually proved quite sticky. It's proved quite difficult to come down. We're actually seeing that below 5%, which is a really good thing. So what does that mean overall for interest rates? Well, it gives the MPC, the Monetary Policy Committee in the UK, the green light to cut interest rates. So expectations are for a 0.25% cut in November. And then there's a chance now, actually a decent chance of a further cut coming through in December.
And the labour market, that's quite important to the inflation picture. And, particularly in the UK and Europe, where it has presented some upward pressure on the figures that we've seen. What's the health of the labour market in the UK?
Yeah, it's good, actually. And I think what you're seeing is that it's improving. Now, you're exactly right in that what we saw, say, a year ago, was that wage growth was very elevated. So you saw what we call a tight labour market overall. So its peak wage growth was around about 8%. Now what we've seen now is wage growth coming in around about 4%. Now for the decision makers in respect of interest rates, that's a good thing. You're seeing an economy in respect of labour a lot less heated compared to what we've seen previously overall. I think the labour market itself, unemployment is still very, very low compared to history. So in that sense, from a labour market perspective, I think the UK economy is actually doing quite well.
Super. So we're seeing economic growth, which is pretty constructive. It's cooling, but from quite a high level. You've got inflation coming down, and central banks, they've got that breathing space to start to lower interest rates, and that's exactly what we've seen come through. What about the US? What were the key dynamics? We're in earnings season, as an example. So what's happening with corporations?
Yeah, absolutely. So, as you say, we're in earnings season. For those that maybe don't know what earnings season is, it's where US companies each quarter come out and report different metrics. So the key metrics looking back are sales and earnings, so basically profit. And they also give future guidance as to the performance of the company as well. And what you've seen is actually, I think there's 50 companies roughly so far that have reported out of the 500. But actually they've reported some really good results. Now, if you look now, 80% of companies have reported above expectations in respect of earnings, so in respect of profit. And actually, if we look at what's been happening this week, obviously most recent one's probably Morgan Stanley, which was probably the biggest one this week. They had a profit increase of 32%. So you saw the share price up 6.5% in after hours trading. That filters into what we were seeing previously last week with some of the big banking stocks, for example, JP Morgan, which they produced very good results overall. So I think for me, why I'm particularly pleased with that, and maybe why I'm sort of mentioning the banking stocks, is, we've had a market certainly through the start of this year up to summer that's been very narrowly led, and it's been led by those big tech companies, Nvidia, all the things that everyone talks about. But what you're starting to see is now a broadening out of that equity market performance, and that's exactly what we've been discussing in our investment meetings. And that's exactly what we're positioned for. So I think for me, if we look at US equity performance over the last month, US equities are up around about 4%. So you've seen really good equity market performance come through overall. So a positive picture at a company level. I'm really pleased to see that then is filtering through into the performance of the stock market overall.
Super. So a couple of takeaways there. You've got economies which are proven to be resilient, actually more resilient than maybe the market had initially expected. You've got inflation which is coming down. Even some of the more stubborn areas of inflation are starting to ease, and that's allowed central banks to lower interest rates. And this is the start of an interest rate cutting cycle, so more to come. And with the health of the economy intact, that's translating through as well into corporates as well. And we're seeing corporations who are seeing profit levels actually expand. So that sort of summary is quite well digested by markets, by multi-asset portfolios, and especially, as you mentioned, the breadth which is coming through, returns not just one sector, that can be quite constructive for a multi-asset portfolio.
Absolutely. I couldn't put it better myself.
Super. Quite a lot of ground to cover there, Chris, but you did a great job. Thank you very much for listening and for watching. Please do tune in next week for the Week in Review.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.